Hello traders, Gary Wagner here, just after 11:30 in Honolulu, 5:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It's the 18th day of January, 2019, and this is the daily report for gold and silver. What a way to end the week with severe, strong pressure in the precious metals markets, taking that complex lower. Gold down about $12 currently. Basis most active February is at 1280.70, and when we look out to the April contract, that is at 1286.90, down 1180. That's important. We'll talk about it as we pull up our technical studies. Silver also tracking lower on the day, giving up almost 18 cents at 1536, and palladium, the new king of the hill, so to speak, that also lost $12 at 1336.10. So as you can see, it is still far above the pricing of gold. Now, the dollar added some headwinds and really strengthened the sell-off we saw today, gaining about 1/3% at 96.02. Equities were higher, and we certainly had that risk on market environment, a 336-point gain in the Dow Jones Industrial Average, 24,706. NASDAQ Composite gaining about 1%, 71.57. And lastly, S&P at 2670. Traders, absolutely no doubt we had this market break and break hard to the downside. If you recall from the last 2 weeks, we have talked about this defined compression and range with a series of lower highs coming in and a series of higher lows. Now today we had that defined breakout, and the break was obviously to the downside, with gold closing lower now by about $11.20. We are looking at most active February, and the interesting thing about this is where we had our low come in, and that is the 0.23% retracement at 1279.90. And we did exit our long position in gold yesterday. We got in roughly at 1268. We got out at 1289.90. and pulled about $21 worth of profit. We also rolled over into an April position. When we pull up our April chart, I'll show you where we are specifically, and also talk to you about where I think this retracement could go to. And traders, I've just gone ahead and pulled up the April contract of gold, and what we can see is in terms of the range itself, we got this same strong break. The market closed at 1287.50. We did enter a position at 95 yesterday. We put our stop in at 83.13 to be exact. So we're giving ourselves a little bit of leeway below the low that came in 2 weeks ago Friday. That is this large candle here, which means that if today's move was basically a one and done, meaning we find some sort of recovery starting next week, we will not get stopped out of the trade. However, if it does break lower, it would A, hit our stop, but B, I think that would signal a move to the 0.38 at 74, or as deep as the 0.618 at 1254. And traders, there is no way we can do an adequate review of the metals markets without talking about palladium. Palladium is the new king of the hill. It is trading at 1337.70, down $10.58 today, and that is basis the March contract. Now, if we do see the metals correct next week, we want to have an idea of where palladium could go to. And so what I'm looking at is starting really at about $818. That is this low that came in middle of August last year and took us to these all-time highs at 1396.90, just a couple of ticks away from 1400, and then of course this sell today. If we have a continuation, a shallow retracement could take palladium as low as 1263.90. A deeper retracement, we would be looking at 1177, as low as 1039 on a 0.618% retracement. But as much as palladium has had bullish sentiment, I wouldn't look for this deep of a retracement. I would be looking either at 1177 or 1236. So traders, we certainly saw gold sell off pretty briskly today. And the real question, as I said, is whether or not this is going to be a one and done because it did hit the 0.23% retracement, or will it continue and enter a major correction? This has been Gary Wagner, wishing you as always good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.